Hey guys and welcome to Shades and Trades FX. Today, we will be analyzing a potential setup on the euro-pound using the key level order block indicator. Okay, let's get started. We start our analysis on the daily time frame. And from a quick glance we notice how a double bottom was wicked. That's called a liquidity grab. The liquidity grab caused the impulsive price move upwards which broke market structure above. Whenever highs or lows are broken, it's a good indication that price will continue that way. Our indicator has an on and off button. That way with one click you can turn it off to keep your charts clean after analysis. Here, we turn it on, and we see the bullish arrow plus the blue zone starting to appear on the daily order block. The bullish sentiment is in line with our analysis, so it's the perfect area to enter. We'll mark the order block highlighted by the indicator with a rectangle so that we can drop to lower time frames and see if there are smaller order blocks inside. This will give us a more refined entry and smaller stop loss, increasing our reward to risk ratio. We then drop down to H4 timeframe and we quickly see there's a smaller order block in the rectangle we placed. We then mark it with our rectangle and go to a lower time frame again to see if we can find a smaller order block inside, thus further refining the zone. We have now dropped down to H1 and the indicator didn't mark any zone in our area, so we proceed to another lower time frame. At M30 we can see there's a fresh order block just below our rectangle, so we will mark with another rectangle. This will be our second entry just in case price decides to come and mitigate it. We'll slightly adjust the rectangle to include this high, this is to include the breaker block here. Don't worry about it, we have our second indicator which automatically draw them. We will dive into them on a separate video. Now we go to our last lower time frame M15 and we notice that the order block is already marked in one of our rectangles. So we head back where we started on the daily time frame and prepare to set our pending orders. We'll place a horizontal line on the top of our rectangle. The price highlighted will be our open price. And the price highlighted by the horizontal line below our rectangle will be our stop loss price. And we proceed to do the same for our second entry. The width of the rectangle in pips is the stop loss, and you can easily use this in a lot size calculator to know what volume or lot size to put, depending on how much percentage of the account you want to risk. Always practice good risk management. Or take profit, we will be targeting the highs, but as price continues to move we will adjust accordingly. So price broke structure, then started to pull back to our entry. As you can see, it shot back up just before touching our zone, but in reality this is to create panic and make some traders fear they are missing out on the move, making them enter too early and setting their stop losses at the low of the candle. But those stop losses will be used as liquidity, which will be grabbed when price comes back to our zone. So recapping, price initially grabbed liquidity, then proceeded to break structure above. It then pulled back to our entry and shot up before touching our zone, but as predicted before, it came back to our first zone and our pending order is now triggered. DP is now set here. Previously it was on the top. It's because price might face some resistance on this consolidated area. Now let's see how this move plays out. Few hours later, price played out as expected and is now in deep profit and just about to hit our TP. So that's one of the many ways we can use the key level order block indicator. Looking at the inputs, everything can be done at the default settings, and you can change the text of the button as well. And on that note we conclude this video. I hope it was educational as well as informative. Happy trading.